Right, welcome back, guys. We are still here, and you know what? It's getting a little bit less hot, thank God. So right now, we have got Rob Strebel and Paul Kremsky of Cumberland. How you doing, guys?
Doing awesome. Thanks for the invite.
Are you enjoying it out here in Dubai?
It's hot.
It is hot.
Very, very hot.
But it's fun.
It's been a great experience. This is my first time in Dubai, actually. So, I mean, it's exceeded expectations for sure.
Yeah, it's interesting. Like, given the markets are a little bit flat, I guess, there's still quite a bull market vibe here, I think.
Absolutely.
When it comes to a conference like Token, though, it's like everyone's thinking about the future of crypto. Everyone's really driven to grow and collaborate and stuff. So he's going to have that volume.
Yeah, but we all remember post FTX 22, right?
The conferences were bleak for a moment.
They were bleak. It was doom and gloom.
I went to a few conferences in New York City. It was like a funeral. It was pretty dire. Yeah. So Singapore, I've done Singapore a few times now. That's amazing. This energy level is impressive.
Token is almost exclusively in very hot cities for their conferences. Dubai, Singapore. There's like seeing a sweat.
Yeah.
So let's talk a bit of shop then. So Cumberland, obviously big market maker in the space. You guys see lots of flows. Have you been seeing any kind of shifts in the type of flows and type of clients that are trading crypto over the last sort of 3 to 6 months, let's say, as the world and certainly the US has become a bit more crypto friendly?
Yeah, it's really opened things up for institutions. And I've been in this business long enough that I've gotten really used to saying the institutions are coming.
Yeah.
And in the past 4 months, they're here in a very real way. And so something that Rob's done a great job of is, building a platform that, companies can come in and trade with us, and the institutions are comfortable with how we do things, how we manage our risk, how we talk to them about theirs, whether it's trading bilaterally on exchanges or via ISDA. Just you can't fake it with institutions. You have to have everything polished up and ready to go. And that's really accelerated the past 4, 5, 6 months.
Nice. And is it all the old TradFi crowd that are coming over, or are there some natives that are still very much dominant in the space and the flows? How's that sort of distribution?
That's a little bit of both, really. I mean, the tailwinds on the regulatory side has certainly helped, but TradFi is coming in strong. They're starting, particularly the banks. They're starting in areas that like stable coins and tokenization. So trying to get their hands dirty, try to get that muscle memory going.
In the stuff that doesn't move around too much.
Exactly. And things that are a little more relevant to their base business model as well, right? Like stablecoin is just NIM, and that's their bread and butter: borrow low and lend high, right? And so they're experimenting with that, but they're all at different levels and going at different pace. But you can definitely see the introduction of more TradFi strategies and more of an experienced trading capability coming into the crypto space. And you can see that in particular in the vol markets.
Is that less crazy speculative punting and more market neutral stuff?
Yeah, it's more just, a safer way of looking at the market. So hodling is no longer a viable strategy anymore post FTX. So if you're putting on a large position, you've got to be hedging in some form or other, or trading the markets more intelligently as well. So it's funny, when I first started, I was like, Bitcoin looks a lot like a mortgage product, almost like this negative convexity. Every time it rallies, everyone's piling in, and every time it sells off, everyone's getting out. Mm-hmm. And now you're starting to see, guys are taking profits at the top. Now their market's selling off, kind of buying the bottom. They're buying puts for downside protection, call overriding. So
preemptive trading.
Yeah, exactly. Just being more careful, thinking a little longer term in terms of how do I want my P&L to look over time? You don't want these big spikes in
on the hedge aspect. I always wondered why, how long is it going to take for the longer dated part of the skew to flip into puts? Because in equities, it's always been in puts for as long as you can remember.
Yeah.
Because there is that hedging demand and that hedging need.
Yeah.
So as more and more institutions own Bitcoin in their portfolios, isn't there more of a natural demand for that protection, and that's going to create a put skew further down the curve? Doesn't seem to have happened yet, though.
No, not yet. Not yet. I mean, the philosophy is still, if you're in the market, you like the market.
Yeah.
And so longer term, if you're really bearish on crypto, you're unlikely to be trading crypto. I do think what we'll see is that skew will start to cheapen further. So it's already compressed quite a bit. If you look at like how
And the call's getting cheaper.
exactly, if you look at how calls used to trade relative to puts, even a year ago, you didn't have this like huge call overriding flow in BTC. You saw it in ETH for a while, and that kind of died down about a year ago.
Right.
That was in the front end side, but we're starting to see it kind of creep longer end. And by longer end, I'm talking like 6 months,
Yeah,
in
but that
BTC.
is quite long for BTC.
Exactly.
It could double by then, right?
For sure. Yeah. Yeah. But we're seeing we're seeing guys coming in and buying calls as well, and like strikes at 150, 200K, right? So there's quite a two-way in terms of how people are trading the longer end of the curve right now, the longer end of the surface.
Yeah. I think historically the way that people have been using options markets and crypto is I'm really, really bullish on Bitcoin. I'm going to go and buy something really deep out of the money. And if it hits, it's like I was just levered up. Or maybe I'm going to time it right and I'm going to get it that way. Now we're seeing people use the options a lot more and say like, actually, these calls are really expensive and I can generate some really healthy yields if I'm willing to give up some upside. But I can sell, 10 to 20 deltas and get, very healthy, 20% yields on that. And like, that's pretty good. And so we're seeing overriders come in and start to use the options market in that manner. And so as Rob says, it kind of balances out a little bit.
Yeah, Imran always gets annoyed is too strong a word, but like you got like Michael Saylor and some of the stuff he's running, but he's like, when you could put on a pretty much zero cost collar and protect your downside.
Yeah, your break evens are amazing.
Yeah.
Yep.
Right? Because, when vol's high, because of that kind of distribution and the way options are priced, the deltas of those calls get pushed up, right? So the out of the moneyness, let's call it, of a call, 20 delta call, is massive relative to a 20 delta put that doesn't actually feel that far away.
Yeah.
So if you're long and you're long yards and yards of the stuff, why are you not collaring it? I don't understand.
Yeah. Or if you're like super bullish long term and you're planning on buying this thing forever, why don't you sell some puts? And if it gets to those levels,
then you're buying the dip.
You're just buying the dip, right? But you're still generating yield while you're waiting for the market to get there, and the market's going to get there.
But I'd say people are doing that trade. I think that trade
absolutely
is a common trade. But I think a much less common trade is just owning a chunk of the stuff and then collaring it by selling the upside and buying the put, so that when random visits to 70K happen because Trump goes nuts or whatever the hell happens, whatever macro narrative's driving it, that's when your hedge just suddenly paid you massive.
Yep.
And you monetize it and go back to being naked long at 70K rather than being long at 100, Yep. So I think when you've got a massive stack, like few people in the industry have, certainly Saylor has mentioned, it's the biggest no-brainer on the planet, if you ask me.
Yeah, if you're sitting on a treasury, and by the way, whether it's Bitcoin or any other asset, if you're sitting on a large treasury and you're not doing some yield generation, it's just leaving a lot on the table, and there's no reason for it. People think that it is this cardinal sin to sell calls because, Bitcoin might go to 200K tomorrow. It's not a cardinal sin to sell calls.
Yeah.
And especially if you look at short-dated calls and you say like, okay, I'm going to sell the 20 delta, 10 delta, but it's going to be the 1 month call and I'll just roll it each month. You can still have a scenario where the price appreciates over time. Maybe you never get called out of it because your strikes keep climbing higher.
I love selling the upside, but I even if it's not call overwriting, when I'm bullish and I want to top up my longs, I'm often doing 1/2, 1/3 call ratios, delta neutral, because I know if we rally, that upside smile was priced at premium, and when we go towards that strike, unless it's a proper breakout, the vol's probably going to reset lower on that upside strike that's trading on that rich part of the smile as we trade towards it, right?
Yeah.
And I just think the dynamic of that structure is just a lovely way to layer over the top of an existing long position, because you're long anyway.
Yep.
So you can kind of think of the extra short calls as kind of overwrites to your long anyway.
Yeah.
But if we go to the sweet spot, you get an extra kicker, right?
Yeah, and we actually see that like even now, I'd say like end of March, early April, we saw very little in terms of call overriding. As soon as the market rallied and vol got a bit of a kick, they came right back in again.
Yeah.
So to your point, as long as it moves in an orderly fashion, as it gets up, you'll get the natural sellers coming back in again.
Yeah, that reset happens quickly, right? I mean, it's a similar
Happens very
dynamic to FX, right? FX trades on a smile. You get usually FX doesn't go anywhere, but when it suddenly decides it wants to go, it runs. But as you ride up the smile, those higher levels of vol they don't sustain.
Yeah.
And like, how long does it take for the people to come and smack the vol back to where it started, right? Yeah. And that in FX, that window's really short. And I suspect in crypto, it's a little bit longer, but with the sophistication of the market, it's getting shorter and shorter right now.
Yeah. It's back on the institutional stuff. So it's a common theme, clearly, that, post-Trump institutions are now coming, as you say. We still don't know what the regulatory landscape looks like, other than knowing it's friendlier, it's going to be friendlier, but we still need to establish that. How kind of ready are these guys, to actually come in? And also from a tech perspective, because it feels like we've had this years of everyone, we can't come into it. So now the gates are open. But do you feel like they're ready, and there's been a lot of building going on in the background, and they're like, yeah, we can come in now. We've just quietly been building for this moment.
So, I mean, I can speak. I'm based in the U.S. and in the U.S. there's still a lot of scar tissue.
Yeah.
I think and people are building, absolutely building. The banks in particular have been very busy, and they were busy even during the Biden era, just very slowly and very carefully and very quietly. I think what's required in order to really get a boost in the U.S. is some sort of a market structure bill. And that will legitimize all of those businesses. And once those businesses are legitimized and the proper rails are put in place, then you can actually build for the long term. But right now, you're always kind of like thinking, all right, well, what happens in 3 years?
Yeah.
I mean, it's definitely getting ingrained in the market, and crypto in general is, I mean, the adoption is full on. I mean, the ETFs alone, I mean, that level of AUM growth is unheard of, right? Yeah. So we're there, but, for a lot of these larger, more bureaucratic companies to come in, they need that legislation. They need to know that in 5 years' time, what I'm building will still exist. That's crucial.
Yeah. It can't just be vibes. It has to be regulation that actually matches the vibes.
But to leave on good vibes, we're still early, right?
Yeah, we're still early. And they're definitely coming, and it's been really exciting to see. And I come from a TradFi background, right? So, I'm a rates guy too. Talk about the dinosaur on the trading floor, the most archaic of back operations and back office, like blockchain. And that's where I get excited. The blockchain, the crypto technology, that is exactly what these markets need. So it's been a very cool ride. Do you think
all these TradFi products are going to move on chain, and you think that's going to happen?
I think that's still a ways away.
Yeah. There's going to be a lot of resistance to that as well.
There's going to be a lot of resistance because as soon as it goes on chain, it's all about commoditizing products, and I don't think any of the big players are in any rush to further commoditize something that's already commoditized. Yeah. But in terms of 24/7 trading, in terms of instantaneous settlement, that blockchain technology is paramount. This is a game changer. It's just a matter of getting used to it, building it. It's going to take a while, but it's coming for sure.
Folks who have been in crypto full time, I think sometimes they take advantage. They take for granted some of the things that we can do here. We've done a couple of test trades, and so, for example, in the FX space, we did a trade where we did it with Zodia Markets, which is part of the Standard Chartered family, and we waited until Friday after the FX markets closed. They called us up and said, hey, we want to trade some USDC versus AUDD, which is an Australian dollar stablecoin, right? And so this is during an hour where you can't trade Aussie dollar versus USD.
Yeah.
Right? We agreed on a price, we did the trade, and we settled it 5 minutes later, right? Yeah. Then they called us up on Sunday, and they said, hey, we want to do the trade in the other direction. No problem. Same thing. We did the trade on the Sunday, we settled it 5 minutes later. That's the type of thing that I think when FX folks start to realize, not only can I do the trade over the weekends, but I can settle it over the weekends. That's going to unlock something that people are going to start to identify. The same in the bond markets, right? Crypto is going to solve the delivery versus payment problem. So we're going to start to see, I think, some, again, it's not going to be widespread, but we're going to start to see some examples of bonds being traded on chain. And there's definitely some primitives that, frankly, you don't have on every chain. If it's going to be one of the larger banks and they're going to want to trade a bonds, they're not going to want to have all the information about that trade just readily available on Etherscan, right?
Yeah.
We're used to the facts, like crypto loves transparency.
Yeah.
Right. For that is a value of the industry.
Yeah.
But frankly, if you're talking about banks doing trades on behalf of clients, not only do they not want transparency, they need privacy. There is a Banking Secrecy Act.
Collateral mobility
Yeah.
is key. You need a privacy.
Yeah. So when we look at collateral movements, we want to see blockchains that are enabled with privacy as a really base layer. And that's something that I think the institutions are just going to have a hard requirements for.
That's really interesting. That makes a lot of sense as well. Yeah. All right, guys. Awesome to have you on the show.
Yeah, thanks for
Thanks for coming on.
Appreciate
Thanks for
it.
joining us out here in the sun.
Yeah. Go grab a beer.
Absolutely.
And looking forward to your DJ set later.
Yeah.
Me too.
He's so happy about that. He's so happy about that.
Thanks for having us, guys.
Thank you.
Cheers, guys.